I think it's impossible to predict price or volatility. And obviously, the trend is your friend as far as Bitcoin's concerned. I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stable coins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stable coins. And so that's interesting, because the fact is, today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. They were awarded coins, they kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be Hut 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while. But that's why I talked about the four vectors. That correlation is going to fall off pretty quickly now that we have, for the first time, calls for carbon audits, because most of the public companies in the US that have been used for proxies have been saying, okay, we'll just buy some carbon offsets. And that worked fine. But now that the SEC wants to audit this, you can't find an auditor that's willing to sign off on that ledger, because you can't say I'm using, dirty energy to mine coin, and I bought, an acre of the Amazon forest and try and pass them off. It doesn't work. There's no way to audit carbon credits. So we are in a bit of let's call it a bit of a pickle right now. And I'll be frank and transparent on this. I have dumped all those stocks as soon as I read the executive order out of Biden. I sold it.
Which stocks are those? The mining
specifically stocks? Yeah, specifically we owned Hut 8. We were indexing some of our my mandate. I can't own Bitcoin. I mean, I can own it personally, but if it's in an operating company, I can't do it because we don't have a regulation, a rule on that yet. And that's why most of it is actually held by high net worth and hedge funds like Roy's, where they don't have that compliance issue. I do have a compliance issue. So we indexed, and it was working just great. Marathon, fantastic trading vehicle against the price of Bitcoin. Riot, Hut 8, and Hive. And so they're good liquid stocks. They're easy to get in and out of, but I don't own a single share. Dump them all. I mean, they're going to be forced. They're going to run into carbon audits, and their expenses are going to go up. And we can talk about where capital is flowing, but it certainly isn't that model anymore.
Okay, but before we get into that and touch on the ESG topic, which you were well ahead of the curve on, Kevin, I just want you to go back to Roy's macro hypothesis here and all the elements that he's brought into it, including this hyperinflation. Does it fit within your realms of possibility that we do hit that kind of high for Bitcoin in 30 years, or is that not even something that you think is feasible?
You can't say that it's a zero, as Roy pointed out. His scenario, when he talks about these extreme prices, is hyperinflation, 15, 20, 25%. I don't know if that's going to happen, but I am on board with him on the trend as your friend on pricing. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it.